Hi everyone and welcome back to my morning report chart appraisals on Tuesday the 17th of March with me, Rich Perry, market analyst at Tech Markets. Moving on to the euro dollar now, and the euro has actually bounced in the past day or so, forming a new low of the 104.56, but yesterday had a fairly decent bounce and climbed around about 100 pips or so from the low, and it's sort of tried to hold on to those gains today. Made an initial move to the upside, but it's interesting because I did speak yesterday about the fact that this Fibonacci level around 106.20 was interesting, because it's sort of, once we started to trade away from it, I thought, well, maybe that is the start of the selling pressure again. But obviously we had that rebound, and again we're back towards that 106.20 mark, and again once more today it still remains as part of this trading period. So we're still consolidating around this Fibonacci level of 61.8%, and we're not trading clear of it yet. So that would suggest we're still not yet on the move back towards parity. The consolidation is underway. There is a very, very slight improvement in the momentum that you can see here. Slight pickup on the RSI, but I don't really see that as any sort of real divergence. I'm seeing that is just normally what you would see with a consolidation phase, where the price is broadly going sideways and the price is and the RSI is just unwinding slightly from that position. So I'm not taking too much into that. But looking at the hourly chart, I talked previously about this big downtrend, and that downtrend obviously has now been broken. So that's just another part of the evidence in terms of this consolidation phase we're seeing. But I don't see, as again, the fact that we've got this old support turned new resistance at 108.20, and then old support turned new resistance around 107 figure. Although, it's the wrong way. Although obviously the reaction high was actually 106.83, but around 107 figure I think is a fairly decent gauge there. And it's interesting that we've got more of a neutral stance on these momentum indicators in line with this consolidation we've got. But again, you're not really seeing any real traction in the upside. It's fallen over in the last couple of hours, just as it did yesterday, around that 106.20 mark. Again, that 106.20 mark is that 61.8% fib level on the daily chart. So that's an interesting bit of resistance there. So 106.19 around there, and I just think it's sort of playing this game in front of the FOMC. Really, I don't think it's going to go anywhere drastic in front of the FOMC, because people obviously don't really know, especially in light of the fact that the economic data in the US has been sort of deteriorating in recent days. No one really knows what the FOMC is going to do. Everyone thinks patience is going to be removed, but maybe there is the chance that it won't, and that has obviously driven a bit of dollar correction in the last few days. Now, I think the euro is going to basically just sort of flatten off a little bit in front of this FOMC meeting, in light of the importance of it. So I'm not expecting too much price action over the next few days, but certainly, next 36 hours, and then I'd imagine it will explode on the FOMC. But in the meantime, 107, as I said, is around about that is my level of resistance, and obviously that fib level at 106.20 is a consistent basis of consolidation for this price. So I wish you good luck in your trading on euro, and I will speak to you later. Thank you.